One thing is probably worrying me more in the medium term. This is what happened in oil.
So Bruno, since your last visit, you mentioned the 10-year US yields. Has there been any changes?
Well, let's look at this chart. In fact, what we have to notice is that we are still in a kind of a small range between 160 and 150, so it's getting like a triangle. The positive things about it is that this consolidation period usually means that they should break on the upside. So we are still waiting there.
And are you expecting the US sector to still be rebounding?
So the financial sectors indeed has, on the relative strength, which is the orange dotted line here, it's still on a rising trend, but maybe the key word is slow here. We see nothing is happening much yet.
And is this slow throughout? Is it still slow in the S&P 500?
Well, yes, it's basically it. We had in between the last 2 weeks a new high at 21.93, then a sort of a pullback last week, and then we are almost back to intraday to 21.93. Relative momentum and strength here is just less overbought, so it could still rise if it breaks out of this small range. What is interesting to note is that despite higher high, if you wish, the VIX is not going really much lower, and it's because it's already very cheap, below 13%. It's even rising a little bit, so probably it's in expectation of the month of September.
And now let's move on to Europe. So is Europe doing a little bit better?
Europe was starting to do a little bit better. As we met last time, relative strength was rising, breaking the downtrend line. We had some hopes. And then, of course, summer doldrum, it's pulled back, but it's still above the previous low. So it's all right. We still hope that it is rebounding. In looking at the charts on the nominal side, what we see is that, unfortunately, we are still below this descending long-term 200-day moving average. So the momentum, which is a little bit oversold, could cross up and help a rebound toward that moving average. But really, we need to break above it to have a stronger signal.
And how about Japan? Is the yen any stronger?
Well, as we see here, the yen has risen again toward these 100 marks and then paused. It's by rising up there, it is a problem for the Nikkei if it breaks above it. Nikkei has pulled back also last week, but it still holds above the trend support. So let's look at the momentum short term and hope that it rebounds there a little. The relative strength is almost flat versus the S&P 500, so it will not outperform.
And you seem a little bit cautious, so what in the markets is worrying you?
Well, one thing is probably worrying me more in the medium term. This is what happened in oil, and that's quite interesting because we remember that oil had declined quite a lot, and then he's making basically a break of its descending trend line, but also a pattern which is relatively symmetrical with two shoulders and one head. So it's called reverse head and shoulders. The key things here is that you can measure the objectives following that pattern once between 26 and 51. So that means that it should move in direction of 67, maybe 70, if it breaks above 51. That's an important thing because not only it will help the relative strength of the energy sector versus the S&P, which is probably helping the S&P 500, but on the other hand, it might also coincide with a rise and a break up of the interest rates because higher oil price could be reminiscence of some inflation to come.
And that's really interesting. And higher oil is also very good for emerging markets. So how's China doing?
Well, it's true that when oil is rising, the relative strength of emerging market is rising a little bit versus the S&P 500. That was the case also for China. Versus emerging markets is also rebounding, so that means that China, which was a little bit subdued, is now taking a bit more lead. Currently, we had also, as in all markets, kind of a pullback last week, and we hope that it rebounds in the right direction once the momentum will be indicating the end of the correction, which is not yet the case, but we have to wait a few days.
And following the Olympics, how's Brazil been doing?
Almost at the end of the Olympics, in the last 3 days, it's taking a little bit of profit, so as if this effect is getting out, but on the other hand, we know that higher oil price would support Brazil. So here we probably have only a pause of the relative strength versus the S&P 500, and it should rebound later on once this short-term correction is over and the stochastic is turning up.
And can you talk us through what's been happening in India?
India, we were a little bit cautious, and we thought that there would be a correction already when we met around August 10. It's exactly what happened. We have this correction. It went from the top of the upper Bollinger Bands to almost the lower Bollinger Bands. The oscillators indicating the momentum has come from overbought to oversold. So hopefully here it's going to be supported by this rising 40-day moving average and should rebound a little bit. We see emerging market of relative strength of India versus emerging market is rebounding. That means there is some rotation between Brazil and India and China.
And speaking of rotation, is the rotation in the US financial sector, is that relative to the S&P 500?
You're right. I think that rotation is really the one that we are waiting for. That means that we want to see the cyclical stocks represented here by the XLY, which is discretionary stocks. This ratio versus this defensive stocks, staples here, for example, should be continue to rise up. So far, it is in the same kind of triangle that we have on the interest rates, so everything is on hold. And here we also have something which is flat. But that's now, the momentum has moved from overbought to oversold, so now it's crossing up. And let's hope in the coming 2 weeks that we will get a signal.
Fantastic. Well, Bruno, once again, thank you so much for coming in today.
You're welcome.
That's all for myself and Bruno, but we'll be back in 2 weeks' time for another market overview. But for now, it's goodbye.